Good afternoon, good morning, and good evening, everyone. Just to make sure that everyone can hear me, can you please kindly say yes or no if you guys can hear me and you guys can see my screen? Audio should be good because I can see from my side that everything is going pretty much okay from here. Okay, wonderful, wonderful. Thank you so much for taking the time out, folks, today and for attending this webinar. I greatly appreciate that. As always, we will begin the webinar by asking a series of questions. But first of all, I wanted to clarify that why we have two webinars in a row with relation to how to trade indices, and that is purely because we have seen a massive demand among our traders and among our investors who really kind of wanted to learn and understand a little bit more about indices, and then they asked and then they requested us that, okay, you know, just do one more webinar in a row so that you guys can really grasp the concept. So I think, again, if you guys still not able to grasp anything, then the recording of this particular webinar will be uploaded on our YouTube platform as always. And don't worry about it if you don't know about our YouTube channel. I will communicate all that information to you guys shortly. So let's begin by asking the series of 3 questions. The first one is, please say yes if you guys have attended any of my previous webinars, or in fact the previous webinar. So just go ahead, say yes or no if you have attended any of my previous webinars. Okay, so I see there are more no's than yes. So that means a lot of people are actually new, and then some of them, they have rejoined from last week, so which is a pretty good sign. Okay, so that really helps. And then the second question that I wanted to ask you guys is, please say yes if you have been trading under a year. Okay, so again, we have a lot of traders who are actually coming in, and you know, they are new to this game, and that's what they want to do. They wanted to learn how to trade indices, so that is pretty good. So now the final and the last question, please say yes if you have been trading for over 2 years. Okay, so again, a very mixed crowd once again. So folks, what this does is this really helps me to gauge the sentiment of my crowd. So it really helps me to understand me a bit more better about you guys, your level of education, your level of understanding, so that I can fine tune my terminology accordingly, so that you can better understand when I am referring to various different terms. And of course, it also helps me to adjust the level of complexity for this particular webinar, so that you guys can really make a good use of it. In today's webinar, folks, I am going to give you guys more opportunity to ask me questions. So please hold your questions or keep typing your questions over here as we go along, but keep your questions on the topic, and I will try to answer as much questions as possible in the last 5 minutes. So let's begin by looking at let's go back to the slides and let's see what exactly is on the agenda. But before we do that, as always, it is important for us to go through this slide of disclaimers and risk warnings. So anything which we'll be discussing in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Right, so the full disclaimer is right in front of you. So let's continue to the next slide and let's see what the agenda is. But before we move on to the agenda, it is important for us for you guys to understand how to contact us and then how to really get that interaction going, so that you guys can really take the opportunity to ask me questions that you may have in your mind, or when you are stuck in a difficult position with respect to your trades or with respect to a decision, and then you don't know how exactly the market, a particular market news really is going to impact, or what is the noise in that news and what is the reality in that news, and then how that is likely to impact the market. Again, having all of those conversations are quite important, and in order for you guys to have those conversations going with us, Forex, it is important for you guys to start interacting. My Twitter handle is right in front of you. It is right over here, which is Naeem Aslam 23. That is the Twitter handle. And for AvaTrade, the Twitter handle is just AvaTrade. Now, I will show you guys just in a moment how to go and find us on Twitter. Just to explain a little bit more about the importance of Twitter. Folks, I cannot stress enough how important it is for you guys to be on a Twitter, because now we live in a time where all the breaking news are coming out more fast and more rapidly on Twitter as compared to any other financial news. Why? Because it takes enormous amount of time for these guys to stop typing and stop propping up those big long essays and then those long news. But on Twitter, you have small sentence, to the point, the actual news given to you. Now, if you are trading Forex, commodities, equities, or fixed income, any of these particular derivatives, and all of a sudden you experience a massive move in a particular derivative, and then you are not unsure that how that particular move has happened, then before you go and then start looking into the news articles, news websites like CNBC, Bloomberg, Wall Street Journal, Twitter can give you that information a lot more quicker, a lot more faster, in a lot more digestible way. I hope that makes sense to you guys. Right, now on a daily basis, in terms of content, I do produce daily analysis on our website. As a chief market analyst, I run the entire content for AvaTrade. And if I haven't mentioned my name before, again, my name is Naeem Aslam, and I work as a chief market analyst. All the research that you see on the AvaTrade's website or on social platforms, most of it is done by myself. Now, on YouTube, you have two different videos coming on a daily basis. Again, I will show you these guys. Number one is your fundamental video. Again, a shorter version of this one is also posted on Twitter. So a longer version, which is about between 5 to 7 minutes, is on YouTube, and a shorter version, very, very small and snappy, is on Twitter. So just less than 2 minutes, you get all the information about the market and the factors that are likely to move the markets. And if the market is going up, the reasons that are driving those moves. And if the market is going up, what are the factors behind that is really driving those forces? All of this you get in a very digestible way, in a very digestible format, in less than 2 minutes. And then for more explanation, you can go onto YouTube. Now, for those of you guys who love technical analysis, who love technical trading, who have better understanding of this trading world, on a daily basis, I put one video about technical analysis, and that video looks at one particular derivative, one particular asset, one particular asset, Forex pair, and then we really dissect the price action and the price action only, because we try not to rely on any of the indicators, because for us the most important thing is the price and the price alone. Now let me go to the internet browser and then bring out those things, the one that I've just discussed with you guys. So here it is, it's right here. So that is my Twitter handle, as you can see, Naeem Aslam 23. You can see all the information is pretty much posted on a daily basis. This is the video that I was really referring earlier, that this is less than 2 minutes, and I'm giving all the information out, what what is moving the market and why that movement is very important. And then these headlines which are likely to move the equity markets, they are also there. And then some more important information in terms of technical analysis as well, and of course some good morning text that you will get every day from us as well. Now, in order to find AvaTrade, you go to your search Twitter bar, and then AvaTrade is going to be the first account there. But remember to make sure that you are following the one with the verified take, because there could be so many different accounts on Twitter. They are perhaps replicating, trying to con you with a similar website. So just make sure that when you are doing this, you have this Twitter verified sign next to it, because then that will show that it is done by Twitter. And more, and another thing about that also is that on the Twitter account, you will see a lot of tweets which are similar to what you will see on my account as well. So again, this is quite important for you guys, to have a look at it. And you also get a lot of not signals, I would say, but they trade information as well, like rebound on sterling dollar, euro dollar, and all of that information keeps coming on a daily basis. Now, in terms of YouTube on AvaTrade, this is where you get all the technical and fundamental analysis. Again, go to YouTube and get that things up for you guys. Now, enough of this, and let's begin with our webinar, and then let's proceed. So the agenda today is why to trade indices, of course, the inverse of indices, the fund flow, the defining levels, and defining a strategy, right? So why to trade indices? Folks, why don't you guys begin with this and answer this particular question, especially the ones who have already attended this one? Why do we trade? Why one would trade index? Say salam to you as well. No, Angus, this webinar will not take more than an hour. My webinars are short and precise, so we will finish before 1:30. So all good. So stay with us, right? Okay. So some answers are coming in, and one of them is because indices have high payouts. No. Okay. Payouts. I don't know what you mean by payouts, but the answer could be yes or no. So the actual answer for that is, look, if you have a retail account, that means you have a limited money. That means you have a limited sum of amount. You cannot go and start investing in Tesla, in Microsoft, in Amazon, and in all of these stocks, because that will require enormous amount of capital. Of course, by doing that, you are really cherry picking the stocks which are going to perform the best, and the best stocks are going to give you the best yield. But that doesn't necessarily mean that is the right strategy to utilize the capital in your portfolio. So what do you do? What you do is you trade index, because by trading an index such as the S&P 500 index, you get an exposure to all the 500 stocks which are trading within the S&P 500 index, whether that is Microsoft, whether that is an Amazon, whether that is Pfizer, whether that is anything. If you wanted to get an exposure to vaccine stocks, if you wanted to get exposure to airline stocks, if you wanted to get exposure to a tech stocks, if you wanted to get exposure to consumer discretionary stocks, if you wanted to get exposure to consumer utility stocks, all of that can happen by using the S&P 500 index, by just trading one index. And more importantly, the indices like Dow Jones index has bigger moves on a daily basis. So a stock may just move, a few points here and there, a few dollars here and there, and then that's it. But guess what? For the Dow Jones, on average, you get more than 200 points, guys, more than 200 points on each direction. There were days when we were getting 2,000 points, 2,000 points. I'll repeat it, 2,000 points a day move. So what does that help? do, that gives you a better opportunity. Remember, if you buy high and sell low, and then sell high and buy low, how much profit one can really make. And more importantly, folks, one person has mentioned it, which is by trading indices, you diversify. You diversify yourself across a basket of stocks within the same sector and across the sector and across the stock market. So that is the point that one will trade indices. Does that make sense to you guys? Okay. So the second one is the inverse of index. Again, today last time I wanted to touch base on this one, but given the audience, the education level, the training, it's again beyond this complex. But I would like to touch base on this one because, just in case, if you wanted to know a little bit more. So there are ETFs, exchange traded funds, which trade in the opposite direction of any derivative. So what do I mean by that? If you are trading S&P 500 index and you have a long position on that, there are ETFs under which you can trade on the opposite side. So rather than one way of doing that is just show the S&P 500 index. But what you can do is you can go long on the S&P 500 index, and you can go long also on the inverse of the index, because what will happen under those circumstances is that as the index, the S&P 500 starts to drop, the inverse index will start to rise and vice versa. So that kind of helps to mitigate, further risk for that. The fund flow, I hope to touch base on that again today a little bit more. This is like, how much capital are we really seeing with respect to institutional clients? Again, the information of this is given very much on a weekly basis in our daily analysis, on a fundamental reports on our website under the section blog, where you will see enormous amount of information on that. Now, defining the levels and defining a strategy. So this is where we bring out the MT4 platform. So let me bring that out and get an escape from here and go over here. So again, this platform can be downloaded from AvaTrade's website, as you can see. And we're going to look at the major indices, and we will try to define certain levels with that. Now, as always, we will begin with the Dow Jones 30, and we will look at the price action from a daily and weekly perspective. Now, folks, when I started the day earlier, this particular candle, which is on the far right, this was positive, but then it went negative, and then it is positive again. So what does that mean? Meaning that this candle is obviously representing the full price action for this particular week. And today we are already in the midweek. So despite that, we are still within the trading range of last week, meaning the highs and lows of that. So we haven't been able to get out of the last week's highs and lows. What we wanted to see is the Dow Jones index coming out of this range. So that would be very positive. But what is quite positive for the Dow Jones index, and the signal has literally come today, is the 50-day moving average, which is in pink right over here. This is your 100 and this is your 200 day. On a weekly time frame, they just becomes weekly rather than daily. The 50-day moving average has crossed for the first time since 2019 above the 200-day moving average. And this means that a major bull rally, it could be starting very soon. Now, the last time, as I said, it happened was earlier back in 2019, because we can see that this was the point when when the 50-day crossed above it, and then we had this massive stellar rally. Of course, the price needs to stay above the 50-day moving average, as we were describing this. This is, again, we've discussed this in earlier video on the Dow Jones, and then the importance of that, right? But as long as the price stays above the 50-day moving average, and the 100-day moving average also crosses above the 200-day moving average, it is highly likely that this rally is easily going to lead us not towards all-time high, but actually new highs and record highs will also be strongly on the cards, which could be forming in the coming days. But so far, from a weekly time perspective, what we're looking at is we're looking a little bit of unsure, like the traders are unsure, unwillingness to back more riskier assets. They need a little bit more help. They need new catalysts, and that catalyst can be the stimulus package, which is being discussed in Washington by Congress. And if Democrats and Republicans come out and then they can form a deal on the next stimulus package, and then we get that $1 trillion+ stimulus package, folks, what do you think is going to happen to the stock market? Of course, the likely chances are that this stock market will continue its journey to the upside. Does that make sense? Feel free to say yes or no. If you have questions, there's no such thing which is called a silly question, because right now it is a time for you guys to start popping up, start putting those questions, because we are running very close to our time, and I really wanted this session to be more of a session where I can answer your questions. What would be a good indication of entry? So someone is asking that. Okay, so we will answer that question later on. But again, keep thinking about more and more questions on that, and then keep sending them over here while we continue with our webinar. Now, with the S&P 500 index, the important element to note over here is the S&P 500 index is still very much leading the rally, because the price action for this particular week, let me just delete these ones because they are no longer delete all selected. Because this week's price action has already gone beyond the last week's high. This is what we wanted to see for the Dow Jones Weekly as well. But for the Dow Jones Weekly chart, what we have is we have a price action which is within the price ranges of last week. But for the S&P 500 index, we have already gone above that. So that is, again, very, very positive. But I wanted to put a note out there in terms of caution, and that caution is look at the difference of the price where it is trading right now with respect to its 50-week moving average, because this is your 50-week moving average. It is trading very far, nearly 20% higher than its 50-week moving average. So that means a retracement could take place in the coming days. But when we look at the price from the daily time frame, we see that the 50 is pretty much close to the price. So there is not really much of a retracement really going on. The retracement happened over here. Perhaps we may see a little retracement in the coming days, but things are looking very solid. And more importantly, the golden cross for the S&P 500 on the daily time frame happened long time ago, a few days back, right over this point, back on the 6th of July, pretty much, that we've happened. And ever since, the stock market rally is continuing its momentum to the upside, and is likely to continue. Now, for the NASDAQ 100 index, what I kind of wanted to show you guys is that I am very much afraid of this move from here to here. This is parabolic. This is crazy. This is insane. Like markets fall like this, for sure, that is okay, but then there's consolidation and then another fall. But explosion like this is something which is insane, definitely insane, you know, because what we're seeing right now with the Nasdaq index is that it is only exploding to the upside and it is continuing its move to the upside. It's like there is no tomorrow. Look at the difference between the 50-week moving average and the current price. It seems like this index is really, really risky to trade for now, for the time being, because what we wanted to see is catching these indices with the price, catching the reality. And even if we look at the daily time frame, again, you know, if we are seeing the double top formed, which was formed, let's see if the price can break below this particular level. Then that means then the next area of support could be near the 50-day moving average, or it could be just over here where we can see a better entry in terms of the Dow Jones price. Because after all, it is a tech, it is all about working from home, it is all about cloud, it is all about companies entertaining consumers while they are sitting at home. Now, something that I also wanted to show you guys is, let me see if I have the chart over here. No, okay, that's okay. You can see that chart on our website, so why don't we do that? Why don't we bring that chart from our website? So spare me 1 second. Let me just pause this one for a second, and then let me bring the chart. So in the chart, as I was saying, it's a quite an interesting chart. And I wanted to run that with you guys a little bit more. And I wanted to discuss that chart with you and the importance of it, the why it is quite important. Again, the chart is available on our website, AvaTrade.com. And I will be also tweeting this chart as well, so you can have a look at it at a later stage. But it is quite an intriguing one, that what exactly is happening with respect to the markets. Basically, what I've done is I've done a comparison of the S&P 500 index with the other European indices like the Dow Jones, the FTSE, the CAC, and all of that. And we're really trying to show that, okay, which particular index has really performed well since then. If it is your which index is really leading the space and which index is really not leading in the space and is really a lagging index. For some strange reason, I'm sorry, I'm not being able to open this chart. I don't know why, but what can you do? I suppose you can't do much. If it doesn't open, there are system errors. That's what you do. That's what you get by looking at it. But the chart is quite interesting. So let me explain the chart just in because it's not opening up. If it opens up, it's great. But if not, then it's fine. So let me start. Okay, so you guys can see my display again, hopefully. So what it was basically that we were looking at the 3 different indices, and the S&P 500 index is obviously the strongest index because it has it has raised all the losses for the year. Of course, the Nasdaq did a long time ago, but the Dow Jones still needs to do that. But it was the DAX index, which was quite interesting because the DAX index is on the verge of clearing those losses. And with the help of stimulus, which you can see that the DAX index is already quite high, is already trading above all of its moving averages on a weekly time frame. What is quite interesting is that this particular move for the DAX index, which is again very much a parabolic move to the upside, explosive move to the upside, is driven by stimulus hopes. So what is happening right now in the stock market is that the U.S. stock market can potentially, there is a strong potential for the U.S. stock market to continue to retrace for the next week or two while Congress continues to discuss the future of the second stimulus package. If we do get a stimulus package in time, any retracement in the stock market could really be a huge opportunity. But if we miss the deadline, that means the stock market can see even further bigger correction. And if that bigger correction really happens, again, I see that as an opportunity. Why? Because another stimulus package is going to happen. Regardless of anything, I am very confident in my own personal view that the second stimulus package is very likely to happen, and that will really put this coronavirus stock market rally to a different level. You know, this again brings down to our talks about this one, that how the 50 has crossed above the 200-day moving average. So with the new stimulus package coming on board, this momentum is really going to continue to a very different level. All right, so this is where we pretty much come to it, but I wanted to read some questions before we finalize everything. Spawn. Okay, what is a retracement? So retracement is like when we go up and then price starts to go down, like here, that is a retracement, and before it starts to go back up. Isn't it better to invest or enter the Dow Jones index now instead of the S&P and NASDAQ? So the question is that should we invest in Dow Jones index now rather than S&P and NASDAQ? You see, the thing is that the S&P and NASDAQ, they both have momentum on their side. Now Dow Jones, even though it is a weaker index, but it doesn't have the momentum behind it. But in terms of valuation, which we are really not doing it as a day trader, because as a day trader you wanted to look more for momentum into the stock market. So the Dow Jones is really the weakest index. So on a down day, you probably want to look at the opportunities to short the Dow, and or on a down day you probably wanted to look for an entry for the S&P 500 index or for the NASDAQ index. What was the inverse of the S&P? Okay, so the inverse of the S&P, there are ETFs, so if let's say if this is the Dow Jones index, the inverse ETF will show, like if it starts to move higher, the inverse ETF will start to go down. So that is a completely separate product. It's a very different concept, and it's a very high level concept. So we'll just leave that for the time being. I want to know the definition of the word. Okay, just explained to you about retracement, Agnes. So if you are still unsure, I would suggest you to watch the video, but I will just explain one more time again about the retracement. So look, this was the high. Price started to come back. So this was a retracement. Now the price is going back up. So retracement is really, when the price only slightly comes back and then it goes back up. So that is what you call really a retracement under those concepts. I hope that makes more sense to you now as compared to what we were discussing before. And yeah, this webinar will be recorded. It is recorded, and the recording will be on the website. Then what else do we have? Would you recommend with a small account? Look, I cannot recommend you anything, but $100 is a really small account. So perhaps it really depends on your risk parameters. Just try to adjust your risk parameters accordingly. Don't take too much of a risk when you only have $100 in your account. Is it a good thing to enter and buy and sell simultaneously? Only if you know it. So the question was if it's a good thing to buy and sell simultaneously. Only if you know it. Why would you do it? It's only that if you are at a critical support or a resistance level, then you can probably look at buy and sell at the same time. So that you are covered, and then you wanted to close the other position quickly, the market starts to gain strength in the direction that you think that it was right. And do you offer signals? I don't offer signals, sorry. All right, folks, so that's pretty much it. Thank you so much for attending as always, and I will speak to you guys next week, same time, same place. Thank you. No, sorry. The next week's webinar is not on Wednesday. Keep an eye on the platform. I think either it's on Monday or on Tuesday. So keep an eye. It's not just as an exception. Next week it is not on Wednesday. All right. Thank you. Bye bye.